So you scan the charts, you spot a good trading signal, so you open a trade and you define your stop loss and a profit target. And all of sudden the market goes to your stop loss, knocks you out of the positions and continues to move in your original directions. I bet this happened to you multiple times. In today's video I will show you trading setups that will allow you to avoid these scenarios, and you will learn how to take advantage of retail traders and trade the direct of big market players. For this approach we will concentrate price action specifically on inside bars. Inside bars are one of the most neglected price action setups in the trading, most likely because traders don't know how to read them properly. Inside bars, if trades correctly, can be a great way to make money trading. Inside bars are easier one or more candlesticks which are contained within the range of one candle. These candlesticks is usually referred to as the mother candles. The second small bars is completely contained by the first one, which is the opposite of the equivalent bar pattern. The inside bar is seen as reversal patterns because it indicates that the market trend is likely to change, especially when it is located tops or bottoms. It is also considered as continuation. The signal is strong trend in markets. The inside bar formations indicates a period of consolidations in case of the daily bullish trend. It reflected that the bulls are not buying any future on the second day, and it is represented by the small red candles on the second day after a strong uptrend. And in case of bearish trend, it means that sellers are not in control of the market anymore. It is reflected by a small green candles after the strong downtrend. Your understanding of the psychology behind this pattern will help you better identify major turning points in the market and time correctly your entry and exit. The inside bar can be traded successfully in the trading market, particularly if the market is moving strongly, because the formations of the price patterns provides you with a great opportunity to join the big move. This strategy is very simple. You have to identify a strong trend and wait for the formations of inside bar pattern in line with the directions of the market. The informations of this pattern indicates that the market paused before making its next move. This will allow you to enter the market in the right time and make big profits. Here the market is trending down. The formations of inside bar patterns gave us several opportunities to join the trend. Remember, you will only look for sound opportunities. In this way, you are just trading in the directions that is favored by the market. Now, even though this price actions setup will work well as a continuation patterns, you are not going to take all the signals into considerations. You have to look for the significant patterns that from specific areas in the market, such as support and resistance, Fibonacci retracements levels, moving average, or pivot points. How to trend the inside bar breakout with support and resistance technical analysis can be very complicated if you don't focus on the most important basics, such as support and resistance level. These areas represents a psychological level where the game is played between buyers and the sellers. If sellers overcome buyers, they will push the price below the support level. If buyers overcome sellers, they will push the price above resistance levels. The inside bar is one of the most reliable price action signals that will help you to find the right time to enter the market and trade with the big players. Once you understand how to use it, combination with these levels, you will get clearly what the market is telling you, and you will make good trading decisions. This example shows how sellers broke the support level, and the formations of the inside bar patterns after the breakout of this level signals indicates in the market right now. No one knows if the support level is really broken. If you sell a market immediately after the breakout of these levels, you making aggressively entry, which is a little tricky and dangerous because the breakout is not confirmed. The safest entry should be after the breakout is of this pattern. The breakout of this candlesticks pattern is clear confirmation that the market is not still in the indecisions period, and sellers are obviously in control of the market. In this other example, the market had difficulty rising above this resistance levels. That is interesting is that happening after the breakout. You will notice that there is the clear inside bar pattern to form here. The formations of these price actions patterns indicate the breakouts is not yet confirmed. Remember, and inside bar formations means indecisions and hesitations. So you have to be careful and bear in mind that false breakout scenario is possible. What will make a difference between you and other traders is your deep understanding of how this pattern works. Some traders will wait for the retest or the breakout which never came. That's a lost opportunity. But if you identified the inside bar setup and you placed a buy order after the breakout of the inside bar pattern, this would have baked into you a decent profit. Here are some key tips on trading the inside bar setup. First, trade the bigger time frames. I am not against trading lower time frames. You can trade this setup on 5-minute time frames using other technical indicators to filter your signals and take just high probability setups. But you have to be experienced traders. If you are bigger, I recommend you to stick with the trading these signals in bigger time frames, such as the daily and the 4-hour time frames. Trading this setup on the lower time frames will increase your chance to overtrade the market and take low probability price action signals. And this is the quickest way to blow up your trading account. If you focus just on the bigger time frames, this will allow you to forget your trade. Instead of being emotionally controlled by the market. Second trade, the domination trade, you should start trading inside bars in line with directions of the market, especially in the strong bullish or the bearish trend, and don't try to trade it against the trend. If you are new buying, when you feel like you master trading these patterns will with the trend, you can move to trade. Range bound markets and counter trends. Third, trade only from the key levels. Remember that not all inside bars are worth your time and effort. There are specific locations where this setup works great, so make sure that your signals is located in the key levels in the market, like major support and resistance, Fibonacci retracement levels, moving average, or pivot points. Fourth, find different factors of the confluence. Trading with confluence meaning combining different signals to make the best trading decisions. To trade using this concept, you need to look for the point in the market where two or more levels are coming together and wait for the obvious signals from these trading methods will give you a confidence in your trading approach, and it will allow you to avoid overtrading. How to trade the false breakout of the inside bar candlestick patterns. Now, banks and financial institutions know how we trade the market. They know how we retail traders think, and where we put our stop losses and the profit targets. This is the reason why they could easily take money from us. One of the most famous strategies that big players use to make money from novice traders is called stop loss hunter strategy. This strategy consists of driving prices to a certain level where there are massive stop loss orders, and the goal is to create liquidity, because without liquidity the market will not move. Once stop losses are hunt, the market goes strongly in the predicted directions. The interaction between big participants and novice traders creates representative patterns in the market. One of the most important candlesticks patterns that illustrate how big financial institutions manipulated the market is the inside bar false breakout patterns. Your understanding of these inside bar false breakout patterns and your ability to detect it on your charts will help you better exploit it to make money instead of being a victim of the market makes the bank's manipulations. This price action signals is formed when price breaks out from the inside bar pattern and then quickly reverse to close within the range of the mother bar. When you stop large candles and then manually inside bars, be ready to witness a false breakout. In most cases, banks will try to trap retail trades. Learning how to trade the inside bar false breakout is something every price action trade should take seriously, being a critical weapon to have in your trading arsenal. Here's an example of how to trade inside the bar false breakouts in the trending market. As you see here, the market was trending down. That indicates that sellers are in control of the market. So if you decide to sell the market near resistance levels, all probabilities will be in your favor. But big players, hunter trades stop before pushing the market to go down. If you are familiar with trading the inside bar false breakout, you will understand that happening in the market, and you will simply take advantage of this manipulation instead of being trapped by the market. In this case, the inside bar false breakout gave us a good selling opportunities. If you are able to identify the setups and you understand the psychology behind it, there should be no reason to get into the position. The chart showed us a good example of inside bar false breakout by signals with the pin bar. As the false breakout break bars in the trending market, in this example there is multiple inside bars within the mother bar structure. This is relatively common, and sometimes you even see 4 or 5 inside bars within a mother bar before the false bar occurs. Here's inside bar false breakouts again the trend. In this case, it was bullish inside bar false breakout that formed at the key support level following the move lower. Since this fake inside bar signals was obvious and well defined, and it had the confluence of the key support level under it, it was a signal worth taking. Trading inside bar false breakout with Fibonacci retracements. I don't know if you're familiar with the Fibonacci retracements, however, I will try to show you how to use in a simple and efficient way to combine with the inside bar false breakout. This strategy is simple. If the market is trading, we wait for retracements, and if the pullback reach 50% or 61% Fibonacci levels, we need just inside bar false breakout signals to confirm our entry. This trade is high probability one because there are lots of factors of the confluence that encourage us to place a sell order. The first reason is the trend, which obviously down, The second reason is the key Fibonacci variations that represent resistance levels, and the third one is the inside bar false breakouts. One signal is not quite enough to make a good trading decisions. You have to look for multiple triggers that support your analysis. This way you will put the odds of the success in your favor. Here's another potential trade. The price moved higher, pullback to reach your key rations and then continues higher. The formations of the inside bar false breakouts in this area indicates that the pullback has fished and another strong move will take place. Understanding the market structure is very important. If the market is trading, you can trade the inside bar false breakout to take advantage of trapping traders and enter the market when no one trades have to get out with the loss. If you learned something new and found value, leave us a like to show your support, subscribe to our channel and hit the bell icon to stay notified when we upload next video. Until next time.